Hey everyone, CryptoVatsik here. Thanks for joining today. Nothing of what you're about to see is considered financial advice, and they're just my opinions. And if you enjoy this content, I would really appreciate it if you smash that like button and subscribe to the channel. Let's get right into it. Okay, this is just going to be a quick market update since my previous video on Bitcoin and Ethereum about a month ago now. And just to recap from that previous video, we'll start with the logarithmic curve chart here. And what I had said in that previous video was the fact that we were starting to drift outside of the lower logarithmic curve support band, this line right here, highlighted by this little red box right there. And at the time of the video, we were just working on this candle, which was really pushing to fight to reclaim that support band and trade back inside of the log curve between the resistance band and the support band. And what I had said is I wanted to see price get back inside and reclaim it as support for further consolidation on the upside of that support band. And my expectation is we'd get some sideways accumulation within the green box here, just like we've had in other previous accumulation ranges, back here in 2020, back here in 2016, and as well as back here in 2012. So I still expect that we'll get something like that, but what I want to see for that to happen first is I would like to see essentially what is this reclaimed level to hold now. I liked the fact as well that when we did drift outside of the support band, we essentially hugged that underside of the band. So it really didn't want to drift too far away from it. So at the moment, scenario A for me is to hold the band and further consolidate under the moving averages for an eventual breakout to another higher high. The vice versa to that would be is if we do lose that support band again and we come back down to 18K or less. I very much want to see similar price action to what we got in the red box here. What is essentially just hug the underside of that support band, which I would accept as a furthered accumulation range, so long as we don't break that reclaimed level. Okay, let's flip over to another chart to get another perspective now. Okay, so here's another look at the Bitcoin chart on the weekly time frame. And I just shared this chart this week on my Twitter and TradingView accounts. Or actually, I think I shared it back on this candle, so possibly last week. And my expectation was that we would come back down and test this green zone in here, which is my buy zone at the moment. And it's pretty simple because we've swept the high from this previous range that we had over here from the August high. We came up, we tapped the 200 exponential moving average. And so though price action looked bearish up here, the bullish case is that we've made a macro higher high in comparison to these lower highs here. So if I'm sticking to my criteria, a retest of this reclaimed level is, in my opinion, a very healthy move, which is that 20K monthly structure reclaim. We formed it as support from back here in June all the way to October. We then deviated below the range, made a fresh new higher high, broke out of this bearish downtrend, and what looks to be now is just essentially retesting that reclaimed level. Now, as much as I would love to see the 20K level hold first, I'm just not certain that's what we're going to get. So I've marked out this green buy zone down here because I think it's very possible, even if we get a nice push up next week into this prior lost structure, is that we might get some wicks and further price action into green thereafter, and then possibly reclaim the 20K at that point, and then it's back up. And I'm definitely going to use some flexibility with this zone. I know it is quite large, however, it does stand true as an area that had support with wicks inside of that zone, which was then a major resistance level for this range we'd had down here. And so I'd be fine getting many multiple wicks inside that zone so long as it holds, and so long as it absolutely holds my invalidation here at just over 17,000. Clearly, if we lose 17,000, then I think we make a new low, but I will consider anything above that level as still a temporary bullish structure. Okay, let me clean up the chart and take a look at a different perspective. Okay, so in my previous video, about a month ago, I think we were trading right here at the time of that video, and we were still trading arguably within this descending channel. And so at the time of that video, I had said that I basically wanted a furthered push to break this high and essentially break out of this bearish trend. On account that we reclaimed the equilibrium here, the target was the range high, but at the time we were fighting to get past this resistance zone. And so what I had said is that I wanted to see us decisively break through the resistance zone and the upper band of this descending channel, because I did not want to consolidate within the resistance zone. I had said that a push to 24K was very much on the table, and that I wanted to then consolidate well above this red zone here. And we'll just drop down to the weekly chart. And so again, in that previous video, I had said if you break this descending channel to the upside, then I think we test the 200 exponential moving average, which we did. And so in my opinion, it would be perfectly healthy to get a rejection, come back down to that reclaimed zone here in red and consolidate above that level. But it just needed to be decisive enough for me to know that we've reclaimed this level as support. Like I said, at the time, I didn't want to see chop within the level or just barely above it, because that would look very weak and then I would expect a drop further down. But if I just stick to my criteria now, then this reclaimed zone should be in theory support. So again, take it with a grain of salt, whatever you're comfortable with, but on a macro level, that's the zone that needs to hold now. Another way of looking at it would be this as well. We had this prior range high down to the range low. We had our deviation outside of the range low, and we came up and we just tested that range high, which of course is resistance. We came back down. We failed to hold the equilibrium here as support. It very much attempted to, and on account now that we've lost it, your next area of support is just the range low. So that is why pretty much everything right now hinges on the fact that this green zone holds. And in my opinion, it's pretty hard to argue that we haven't made a higher high at this point. A lot of people were saying the trend is invalidated on account of a higher high. Well, where are the lower highs that they are measuring this from? The only lower highs I can see are here, 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 and here, and even arguably here. So if you take it from here, we broke it, made a higher high. If you take it from here, we broke it, made a higher high. Even if you take it from here, we broke it and made a higher high. This is the only previous lower high that we have not decisively broken, and we've only swept it. But there are multiple lower highs in here that we have broken, and there's also this diagonal that we have clearly broken. So even if this price action still looks weak, if you follow this criteria, we've broken out of a macro downtrend. Even if we switch to the monthly. So if you switch to the monthly here, the most obvious lower high to me is this one right here at 20.5K. And again, this is the one that's in question that we have definitely not broken above and just swept. So if you look at it from this perspective, we broke this lower high here, but it doesn't mean that it just bounces right off of it and shoots straight up. Again, that zone that I'm looking for is all this liquidity in here. And just from an accumulation standpoint, what you want to see typically for accumulation phases is you want to see price action that forms a bottom on a macro time frame. We're talking weekly or monthly level here. You have that phase of accumulation where you're essentially bouncing within a range. And typically what we've seen is then you'll get a brief deviation range below the prior accumulation range, which then is reclaimed and continues a form of accumulation on account that we've reclaimed that level now. But the key here being is that it must hold that reclaimed level. So if you see something like this and then you dip back down inside of it underneath, then it's invalidated and these lows become in question. So if you're just looking at it from that standpoint, and if this is assumed deviation below the range of accumulation, then that's exactly why I want to see this green reclaimed level hold for furthered accumulation above that reclaimed level. Even if we push up to 30K, like I shared in that previous chart, I don't necessarily think it's straight to all-time highs after that. I do think we'll have a form of a correction back down to almost near where we are currently. Something like this would be perfectly acceptable in my opinion, but again, on account that we hold green. And just for argument's sake, I think that if we do lose this low and we are headed lower, I'm looking right here at this breakdown level that we had back in December or early January 2017, as well as the high that we had on our first major rally after the bear market. And that sits right at just 13,500. I would then be looking for dips into this green zone as a reassessed accumulation range. But if you trade or invest on absolutes, then you might just miss it. If you say we're for sure going to get 12,000, 13,000, and you take zero risk on here at these lows, and say we never get it, and then we're up here trading at 40,000 by the end of 2023, because you were so certain that we were going to get 13, 12K, you might have just missed it. And the vice versa, if you're saying this was definitely the generational bottom, and we're headed to straight all-time highs or accumulation, and we'll never breach this low, then you might in fact shoot yourself in the foot if we do end up getting price action down here at some point. So it just means stay objective and don't trade or invest on absolutes. Okay, super quickly, I'll just cover Ethereum. Very similar story with ETH. What I have noticed something interesting is we had this triangle formation the last bear market. So we had this triangle form here on the last bear market that began off of our bottom here. And I thought it was interesting. Once we broke out of that triangle, it was basically off to the next bull market. And I just thought it was interesting. This is not a trade plan by any means, but I just noticed we are forming a triangle again at this point. So I thought that was interesting. So long as we can hold it, I see no reason why we couldn't break to the upside. Another way of looking at it as well would be essentially this ascending wedge. So you have essentially an uptrend followed by a resistance level. So possible scenario, just something interesting I thought I saw. But the main thing with Ethereum that I did note in that prior video was that we had this reclaimed level, just like Bitcoin. When we had this range from the range high here down to the range low, formed from this price action over here, we briefly reclaimed it. We traded back inside of that range again in the upper 50th percentile of the overall range down here. And then of course smashed to the upside of the range high. So for me, that is the level that I want to see held right in there. And it's just for a couple reasons, really simple. One, it's this uptrend that we've got. And two, it's the downtrend that we've broken out of. So essentially, this is that sweet spot. That's the decision maker level where any kind of test in here would be testing this diagonal breakout to the upside and retest, and it would be testing this uptrend that we have from this low and this low, as well as this horizontal reclaimed level from this range that we had over here in green. So you come down in here, you chop around, that's fine. But again, very similar story to Bitcoin. That's that level that I want to see held. And similar story, just like Bitcoin, is we've broken that market structure with this previous lower high. I think we broke 2 lower highs on Bitcoin. So maybe relative strength on Ethereum a little bit worse, but we did technically make a higher high here in comparison to this lower high. And again, that's not even including this lower high here on that wick. So if you count it from here, then we do have 2 lower high breaks. So it really just depends what's going to happen. Time will tell. And again, just for argument's sake, if we do break lower, I'm targeting this previous breakdown level. So we had this bearish order block area here and an area of support that was lost. So that was the level I'm looking at, and confluence with this bearish retest right there. So we'll just go ahead and mark that out, drag it over and see where it lines up. Okay. So, and again, on account we lose green, we lose the diagonal, then I'm looking at about $800 for 1 Ethereum coin, and dips below that level are for buying in my humble opinion. And honestly, if we got something like that, as much as it would suck, it would provide a pretty good opportunity long term in my opinion. So, and there's confluence with that level with this brief area of consolidation under resistance right here. You can see where price was compressing here under resistance until a very clean break with a powerful candle. So there is some confluence at that level if we so happen to break lower. And I cover both directions because either way can happen. Either option can happen. I don't trade in absolutes. I don't assume we're headed to all-time highs, and I don't assume we're headed lower. You have to adjust and be flexible as a trader or investor and adapt to new information. Have those levels of invalidation, have your criteria, and adjust accordingly. All right, guys, I think that about wraps up this video. Thank you for joining. I really appreciate it. If you did like this video, please give it a like. And if you're new, don't forget to subscribe. As always, you can follow me on Twitter at CryptoVatsik. Trade safe, trade objectively, and we'll see you next time. Peace.